everyone, this is Lori Davis, and the lead experts are all here with us today. And we have a special guest. It is Amber with the Credit Couple. So, Amber, thank you so much for hopping on. This is the new year. People are going to want to start looking at whether they can afford to buy a home. Maybe they're selling their homes, the market's been hot. So, how can we help our list of buyers that we have found out do not have good credit? What kind of things can you do to help them?
Well, and I think that's becoming more and more of a problem, and that's why I really love this industry so much. So, just a little background on me. My name is Amber Woodard. I am the better half, no kidding, of the Credit Couple, and I'm a former teacher. I'm a former science nerd, former high school science teacher, and um, you know, I love teaching. I worked in some pretty rough schools and I fell in love with not just teaching and helping, but changing lives, loving on other people. A lot of my kids just needed a lot of love, and I just fell in love with the relationship part of it. And my problem was, my oldest daughter, she's 21 now, she was getting ready for college, and I went, wait a minute. So on paper, I bring home all this money, and then I look at my paycheck and I'm trying to pay my electric bill. So I couldn't help her. My husband was also a teacher, and we were just kind of lost. We went back to school for cybersecurity. There's no relationship building in cybersecurity. If any of you are ever thinking of cybersecurity, there is no relationship building in that industry. And we were just stuck, and we needed our credit fixed. I thought I was smart. I went on and did online disputes. Our credit score went from the mid 600s up to about 750, in a month, because that happens when you online dispute, and then down to 400 3 months later. And I'm talking like 405, 403. And so I just gave up, decided, I'm going to build a hut in the woods, and this is my life. But we ran across somebody that was telling us about, what if you could offer credit repair, but it was educational? What if you could do financial education and credit repair was a part of it, and you could really change people's lives? And I was like, okay, now I got to take a look at this. So I really dove into it, and I was hooked pretty fast. You know, I do credit repair, and credit repair is the eye candy. It's what gets people in because everybody knows they need credit repair. Not everybody knows they need help with their budgeting. Not everybody knows that they need to know how to pay down their debt. Not just that it needs to be paid down, but the best and the most cost effective way to do it. Not everybody knows that, you have to have savings for different things. You need that savings for what you want to do next month with your spouse when y'all go out, but you need that savings for long term and for emergencies. So it was a whole financial picture. So I got into this, and let me tell you, like I said, I did fall in love. And my favorite thing to work with, and I'm not just try to be nice here. I love working with realtors and mortgage lenders, and the reason is selfish. It's because I like that win at the end. I like that message that says I got my house.
Yeah.
I'm finally approved. And that's because these people are after a goal. They're hungry. They've been told no. They've been told you can't do this. They've been told it's never going to happen. And in their heads, they just don't see how it could happen. So basically what we do is this. We get a client that needs help with their credit. And I want to know what your goals are, because your goals are everything. Are you trying to buy a house? Are you trying to buy a house and a car? So we need to talk about how that car goes a little bit later after that house. What are your goals and what is your timeline? Because depending on the timeline, I can do different things with you. We're now offering secured loans. That's huge if someone's looking to buy in a year. We have secured cards. We have secured card programs that automatically transfer into unsecured cards. We have things that we can do that are quick and don't have an inquiry and give them that little boost that they need. If they, hey, I'm like 27 points short. What can we do in the next 45 days? I got you. You can't be in a dispute because you need to go get approved for a mortgage. But I have you. Like, we can do something to get you that 27 points you need, but then you're coming back to me because you're still not going to have an 850. So we have different products depending on their goals and their timeline. I want to know what's wrong. What's going on with your credit? A lot of people, we all know, I'm sure you guys have asked, how are you doing financially? And people are like, oh, I just have that one collection on my credit report. No, you have 12. You have 12 of them.
Mhm.
And you have that
Right.
eviction and the bankruptcy too, and we're going to need to do something about those. So when those people, we just kind of talk through it, and we do a lot of education on the way. Oh, so you're getting late payments on your truck right now. And I just want you to know that those make a huge impact, and that's one of the worst things you can do is make a late payment. So if nothing else, we have before you pay me to fix your credit, let's get that truck caught up. So we kind of do some education along the way there, and then we talk about their positive credit. I explain you need revolving and installment credit. What kind of credit cards do you have? What are your limits? What are your balances? How do you pay it? Do you pay it off every month? Because that's probably hurting you. Are you running up your balances and then slowly paying them down? Like, how are you using this? Because eventually I'm going to teach you how to make your debit card, your credit card into your debit card. So we look at that. We look at their installment credit. Do you have a car financed? Do you have loans out? What's going on? How are your student loans? Because we just added student loan relief. I just got my payments cut from $1,500 a month. This is me personal to 232. That's life changing. $1,000+ a
Wow.
month is life changing. So how are your student loans? Because what's that looking like on your debt to income? If they're factoring in a $1,500 payment for mine, the value of the house I can get is going to go way down.
Mhm.
So we're going to look at all of that. And then we talk to them about how our program can help them. Hey, I see you got some late payments. I see you have that repossession you still owe quite a bit of money on. We've got some charge offs. We got some late payments. Your inquiries, you need to stay out of Kohl's because your inquiries are really high. What do we need to do? What does the game plan look like? Where are we going? So I'm going to get them into the program, and then I'm going to coach them along the way. So when they sign up with me, they're going to have a portal. They can log in and they can access all of their services, credit monitoring, identity monitoring. In fact, we just got a brand new credit monitoring service. They're going to see all 3 scores and reports updated daily if they want.
Incredible.
That's peace of mind. And that's peace of mind for you as their realtor, because when you call me and you say, hey, how's Billy doing? And I have to say, well, we're going to have to go through some processes to pull that up really fast because we don't get updates, but every, 45 to 60 days. Now I can say, hey, Billy, send me your reports from your credit monitoring. I need to get with your realtor. We're going to get together and get on a 3-way call. And it makes everybody's life so much easier, and it makes things run so much more efficiently. They have all of those tools. They have a savings tool. We're going to show them how to save for multiple things. We have a debt payoff system. Our new credit monitoring is actually going to show them what happens to their score as that debt gets paid off. We have a budgeting tool. I was a teacher. I got paid once a month. That's really easy because then you pay all your bills on the 3rd and then you're broke until, the 1st comes around again. But, being in business, I've learned that maybe I wasn't a great budgeter because now, I get paid here, I get paid there, I get paid. And I had to, and I feel like other people are in that same situation where maybe their budget isn't working for them. So we have a budgeting tool. Like I said before, we're going to offer secured loans. We are going to offer secured cards, multiple secured cards. Some of my people that are sitting at 650 and want to get to, they want to build even after they get their house. We're going to talk unsecured cards. We're going to talk about how you're using them. The student debt relief is going to be a huge factor in what we're offering starting. We actually started that today. So that's going to be a huge one as well. And we get them plugged in, get them going. Sometimes there's outside products like kickoff.com or Self-Lender that will be helpful to them. And we're going to follow them along the way. Rent reporting works sometimes as well. We do have a rent reporting program. And we just kind of put these things in and work it into their timeline and into their budget, because especially when I have a couple that comes on and they both need help, sometimes that's rough. I mean, that's a huge investment to them. And sometimes it's again, with the budgeting and the money management, it's hard sometimes to say, well, I don't want to go out this month. I'm going to have to pay to get my past mistakes taken care of. So I do a lot of explaining of, I don't know what kind of house you're going to get or what your budget really is or anything, but just think about the difference in saving 2 percentage points. What happens when your car interest goes from 17% to 5%? You've just freed up money that you can use for anything. And when you buy a house, there's going to be a lot more expenses. We have got to get your debt down, get your interest rates down so that you can afford all of this. So I do a little bit of It's the teacher in me. You know, just like we need to talk about your whole situation. I want to get to know you. Do you have kids? Are you looking for a backyard for your kids? What are your goals? What is your why? And honestly, it's to me, there are a lot of, I hate to say the word, there are a lot of scams when it comes to anything financial. There really are. And I want to get on the phone with my clients. I want to get to know you, and I want you to know my heart because my heart's in the right place. I'm not going to say I'm always right or always do everything perfectly, but I'm going to do my best. And if I do mess it up, which I'm going to fix it because we're going to get you to your goals. And integrity, you can hear integrity over the phone. I'm going to get you on the phone and I'm going to let you know that I really want to work with you.
Well, I'll tell you what,
Does it?
just from everything that you're saying, I mean, obviously we know you're going to relate it like you did to us, how knowledgeable you are. You know, it comes out within the first 5 minutes. We know that you know what you're doing, you know, and you're right. There is a lot of scams out there and people are so scared to spend their money to make things better. So with that being said, what does it cost for somebody to get started? And is there different amounts that they have to pay according to what they want, or is it one amount for the full package that they get?
So for our pretty much full package, it's going to be $188 up front and $89 a month. After 3 months, which usually most people are 4 to 6 months, sometimes it's less, sometimes it's more, it's going to go down to $69. I'm never going to tell them that there may not be add-ons. If you have to get a secured card, there's a deposit. If I need to get you into a secured loan, you're going to be putting that money over there so that you can get that secured loan. We may need to do kickoff, which is $2 a month. You know, it's a credit builder that looks like a revolving account. $500 shows up like you have a $500 credit card with a low balance. It's instant. It's no inquiry. It's worth $2 a month.
Of course.
So there may be, you know, if they want to add 2 years of rent reporting, it's $145. It's $19 a month for the student loan relief. But when you compare that, that's definitely worth $19 a month. So there may be some other things, but for the main program where they're going to get the credit monitoring, identity monitoring, the debt payoff, savings, budgeting, the credit repair, the education, the follow-up, their portal where they can do everything, all of that is going to be the $188 and then $89 a month.
That is incredible. Do you guys have anything that you want to add, Charles? I think you had your
Yeah,
hand
I
up.
have a question. You know, some of us have been in this game for a little while at this point, and there has been, you know, no shortage of conversations about, you know, credit repair, credit rebuilding, things of that nature. And as you alluded to a few moments ago, there's a lot of smoke. There's not a lot of, you know, action in that industry. So it's always really nice to talk with somebody that is credible, that is actually interested in helping the consumer. But a question I have is, obviously, you know, there's people that are proactive and know they got some stuff on their credit report and they try to do this before they start the process. But often we find out that there's a credit issue, you know, 30 minutes before they were hoping to go look at properties, right? So, you know, if you could, I know everybody's different, right? And every scenario is different, but I mean, what's realistic? I mean, you said most of the time 4 to 6 months, some people are 2 to 3. I mean, is there, in that amount of time, are you expecting the scores to come up? Are you expecting removal of certain things? Are you expecting reduction of interest rates? I mean, in a very general way, what's possible in 3 months? I mean, if somebody comes to you with a 500 credit score, what's the likelihood of that 620?
If somebody comes to me with a 500, I would never tell them you're going to be ready in 30 days. Miracles happen. I've had people go up 200 points in 30 to 60 days. If somebody's been sitting in debt relief and paying debt relief companies for the last 3 years and their scores in 500, if they'll cancel that debt relief and get over and start working with us, there's a good chance they'll be there in a few months. But for the general, we're probably not going to see 150 point increase in a couple of months. Usually people start seeing results in 30 to 45 days. The reason I say 30 days is if they need a little boost and they get on something like Kickoff. They have no credit cards right now. They have no revolving credit. They just have those couple of things that are hurting them, keeping their score down. I put them on Kickoff. Their score may go up 75 points in a month. Now, if you get somebody that has 5 credit cards and they add the kickoff, they might gain, because they're freeing up a little bit of their utilization, they may gain a few points, but they're not going to have that huge difference. At the same time, let's say that somebody, they need to go get a secured loan, which, by the way, I would never do with somebody that needed to get a house quickly. They're likely to see their score drop that first month. They've got that inquiry, they've got that new account showing. So that's obviously why, I don't want to add the account. I also don't want their score to drop quickly if they're about to buy. So it's something that would be more long-term and that would build gradually over time. We say 4 to 6 months. In 4 to 6 months, I can get somebody with a 500 up close to a 7.
Wow.
Or over. But realistically, in 4 to 6 months, I can get somebody with a 500 up to. Now, me starting out with a 403, I'll tell you, at first, my score, probably in my first 45 days, I was the inquiry queen. I had like 17 inquiries removed. I had a few of my collections come off, and I think my score went from like a 40 something, and it went up into the 500s. And then it took me probably 8 months to get up to 700. I started at 403.
That's
That's
incredible.
great.
And if
Yeah.
I'm being honest, I wasn't working as hard on myself as I was my clients. So I wasn't exactly walking the walk and talking the talk. So I probably could have done it faster, but it is going to take time. Now, I have seen, I had someone recently that needed, I think I mentioned 7 points. They needed 7 points. They just needed 7 points. And we looked, and I was like, wait a minute. Your credit card balances, you told me they were this, but they're reporting higher right now. When did you pay those? Oh, I paid them yesterday.
Oh.
And I said, well, you just need to call up. I think it was Capital One. And I said, why don't you ask them if they'll report for you? Just ask them. They don't always do it, but just ask. They did. They reported it. The next week, their score was right. So
Nice.
if I can find something, not even using my service, that is going to get them over that hump and into the house, we're going to do that. But, like I said, it varies. I've seen 200 plus points in 30 days. And I just talked to a lady who had some pretty tough collections, and that was all that was really on hers. And she said, I'm 30 days in and I've only gone up 8 points. And I was like, man, you're about to hit it. We're about to have all this good stuff that you're doing hit. And then you're going to get some of yours off the next round. So it does vary.
I got one more question for you.
Sure.
Something I think that probably a lot of people watching this video will be interested in. In the world of credit, people think, do I pay my payments on time? As if that's the only factor, right? Oh, I pay my bills on time, but out of a $10,000 limit, I have $9,999 that I've spent. So if you could share with us off the top of your head, what are the main elements that go into the credit score? Because it's more than just paying on time, right?
It absolutely is. The first thing that you want to look at is those on-time payments. That's going to be the biggest thing. Making your payments on time every month and having some positive payments to report. So when I say that you have to have revolving and installment credit, a big part of that is if you're not reporting any positive payments, your positive payment history is not going up.
That's right.
The next thing that you need to look at is your utilization on your credit card. So if I'm just walking through life, I have my home, I have my car, having your credit cards at 29 and under, 29% and under, you're good. It's not hurting you. Anything over 29%, you're going to start seeing some decrease to your score. During COVID, I've seen even my clients that were building up started living off those credit cards, and their scores just plummeted, even though they were making their payments. So you want to keep it under 29. If you're going to buy a house, if you're going to buy a car, if you're going to use money in any big way, use your credit in any big way, under 9%. 2 to 9 is what I tell people. A lot of people say 5 to 9. 5 to 9 is a little more safe. Never 0. Don't have it at 0. You're not losing a lot of points at 0, but you're losing some points. And again, if your utilization is showing a 0, first of all, it looks like you have no revolving credit at a glance. And second, it's showing that it's not showing a lot of positive payment history there. You're not getting that built up. So I always tell people, the people that say, well, I just go use my credit card and I pay it off that day. And I said, okay, that's great. But from now on, let's pay it down to $5. Let's pay it down to $5. Just pay it down to $10 every time. So that's a big one, is your utilization. Another thing is your credit mix. It's going to be, it's going to be your revolving and your installment credit. And I know lenders, especially, and I know it's a little bit different for different lenders, but most of the time you're going to have 3 open accounts, period. That credit mix is huge. Your length of history is huge. You can't go start your credit yesterday and expect to have a great credit score. In fact, they say to get to 850, you have to have a minimum of 10 years of credit history. And that's an average. That's an average of all your accounts. So if you're like, man, I got to get some more credit history, and you go open a bunch of new cards, you're lowering that average. You're not increasing that average length there. That doesn't work that way. But that's when you get into, sometimes if somebody has 6 months of credit history, sometimes adding on like rental history, giving them that 2 years instantly is huge. 10% is actually your inquiries. Because if the bank sees you as, oh my gosh, I need money, I need credit, they see you as a risk. They see you as being desperate. So those inquiries actually are 10% of your score, which is pretty significant. So there are a lot of factors that go into it. But yes, paying your bills on time, not running up your credit cards, having open accounts and taking care of them, because you have to remember your credit score is supposed to be a number that shows the bank or shows the lender how good you are with your money. It's not always the best representation, because it brings up the past a little too much sometimes, but it's telling them how much they can trust you and how likely they are to get their money.
Can I ask a question?
Yes, sir.
What about, you hear a lot with clients, or I've heard this a lot with clients, is, well, most of mine are medical and medical doesn't count. I hear that all the time. So
do you want to know where they heard that?
What's that?
Well, okay. I said, do you want to know where they likely heard that?
Sure.
Their lender.
Okay.
And I do this. I actually do a credit for realtors training. Me and my husband actually do that one together. I'll have to let you know, Lori, the next time I actually present that, and so you can let everybody know to get on. But that's one of the big misconceptions I bring up. In fact, I think it's the first one I bring up. As far as buying a house, when a lender goes and looks at your credit and they're looking at your DTI, they don't count those medical bills that you owe. They're going to count that Kohl's card that you didn't pay. They're going to count other things. They're going to count that Sprint bill for $1,800 that you don't even remember your phone number for. But they're not going to count those medical bills in your debt to income. That does not mean that it doesn't count on your credit score. So you can have 60 medical bills on there. If you're still sitting with a 700 credit score, first of all, congratulations. I don't know how you did it, but it doesn't matter. But the thing is those medical bills are holding your credit score down. Your credit score matters. So you do need to get them deleted. So it's kind of a misinformation put out there that lenders say, I discount your medical bills or I disregard your medical bills. And what they're saying is it's for your debt to income.
Mm-hmm.
Gotcha. Okay.
But as far as credit, it matters.
I have a question.
Yes, ma'am.
You spoke about credit history. I've heard of individuals getting on another card authorized user, but I had one to say that they were going to do that, but it was after they had applied for a mortgage loan. So the mortgage lender said that they just don't look at that because it appears that you're doing that just for this purpose. When do you advise to have an authorized user, or do you during this credit process?
There we go.
Am I back? Okay.
Did you get her question? I know you were frozen for a minute.
No, I didn't. I got it for all the way to where you said that she did it after a mortgage application.
Yes, just talk about becoming an authorized user. When should that take place? Is that something that you even suggest during the process? You may not even suggest that, but I've had people ask me, can I become an authorized user on an account?
So yes, to answer your question, authorized user is often a great idea, but here's the thing. You have to trust the person and know the person that you're becoming an authorized user for. If you get your best friend Sally and you get on her Macy's card, and then the Macy's sale comes up and she runs up that credit card, you're responsible. If she has an issue and makes a late payment, you're responsible. So when you go onto someone's card as an authorized user, whatever they do to their card reflects on you. So as long as it's someone that you really trust, or let's say that they're getting close to that mortgage process and they need that little boost on there, and they can get on and go, look, Sally, I'm going to take your card. I'm going to hide it from you for the next month because I need this house. Then you should be good on that. I know a lot of people put their kids as authorized users on their cards. Some cards you can go as early as like 5 years old and add your kids. I would not suggest that because you don't know what's going to happen when your kid's 13. And really, it's honestly not going to do a whole lot more good for them than if you add them when they're 17 or so. But it's a great way to start your kids building credit when they become older teens as well. So authorized user is great. It needs to be done before that mortgage is pulled. And one thing I always tell my clients is a lot of places, when you get added as an authorized user, they'll add you as a signer. And we've been having that problem a lot because if you don't designate, if the person that adds you doesn't designate that they're an authorized user, they can get added as a signer and then nothing goes on that credit report and you went through all of that trouble. But yes, that is a way to get a great boost to someone's credit.
Amazing.
Amber, I have a question in regards to the timelines. There's a, I don't want to say misconception, but there's a lot of companies out there that actually are very slow at repairing credit, just simply when they're charging a monthly fee. Do you set the expectation at the beginning just so that they'll be able to see that you're actually different?
Well, I explain it, and I get that a lot. Hey, I was with this one that starts with an L for a really long time, and everything was going really good in the beginning, and then it just stopped. And I explained they're a for-profit company, and legally, they are only allowed to dispute 3 to 4 items at a time.
Okay.
So they take your 3 or 4 easiest items to delete, they put it through that 4 to 6 month process, potentially, and then they go grab 3 or 4 more. And then 3 or 4 more. So it does take a long time. And I would never say that they're not doing their job. They are. It's just a very slow process. We actually repair credit through a nonprofit.
Okay.
We, again, the teacher and me, we go into schools and we teach kids about money and finance.
Love
Okay.
it.
So we have that nonprofit designation. Therefore, we have the ability to dispute. It's just a loophole. I mean, it's just one of those crazy loopholes. We have the ability to dispute every single item from day one.
Okay.
And if we get their updates, from their credit monitoring, and it says that they've added a late payment or they added a collection on there, we can add that in as well. No additional cost or anything. We're constantly monitoring it to see what we need to add. So yeah, a lot of places are slow. And I think that kind of is a misconception, is that they're trying to make it take forever. And it's not that they're trying to make it take forever. They're just bound by those rules that they can only dispute a few items at a time.
Okay. Well, I think that's really good to know because I personally was not aware that there was a loophole if you utilize a nonprofit versus using a for-profit company. So that's definitely something that if you share, I think it would be able to build trust.
Right. It really does. And it helps us just to be fast. I mean, nobody wants to be in credit repair for 2 or 3 years.
Now, as far as like sharing this video, we're going to have it across our social media, send it out to our agents, have it on our YouTube. But would you let us know when you're doing a buyer, build credit report seminar, if you do those for the public, so that we can invite people as well. And then also totally would love to have you back to actually do a workshop. We do workshops. We're doing it once a month now, aren't we, Charles? I believe is our workshop schedule. So we actually do a workshop that is pure training. So if we can be included in that, or if you do one just for our group, that would be fantastic. I know that's a lot to ask for if you have a pretty full schedule, but I think from what you're sharing with us, it's so much value, so much that it can help with getting the amount of buyers that we all know we have that are really, they could get a better interest rate for their loan if we could just get them plugged in to a program like yours. The better the interest rate or the better the credit score, the better the interest rate for their loans. That's huge for them. So like you said, somebody could be sitting at 720, but they can do better and we can help them do better. So The other thing is, I think a lot of couples anymore don't communicate and they don't budget together. So there's
Yes, ma'am.
be a big breakdown of like when you finally meet with a couple, you realize what a mess they really are because neither one knows what they're doing. You know, there's no communication on what cards they have. There's cards that neither one knew existed, maybe, that was out there and they opened it and forgot about it. I mean, there's just so many things. But on top of that, the amount of people that don't have any type of revolving credit because they make enough money to pay cash. They buy homes cash, they buy their cars cash, they, invest whatever was in savings into crypto or stocks. So those type of people I would like to hit too, because I think, at some point they really should have the opportunity to utilize credit if they need to. And it's a horrible thing when they go to decide to get a loan and they can't because they literally have no type of credit. So I think that's important too, because believe it or not, people with money do not always think about revolving credit.
They don't. And another area that we have a big lack of education in is our people with I-10s. I can help them build their credit. I can help them build their credit on their I-10 and also get it up there for when they get their social security number. And that is a lot of your cash buyers too, because when you're told, hey, you don't even have a social security number yet, you can't do anything. What are you going to start doing? You're going to start paying for everything with cash. And even then, when you get your social security number afterwards, you're still going to have that issue. So there is a big, and there's a big, I don't want to go into debt, credit score is your debt number, all of that good stuff. And I think once people talk to me, they understand I'm not trying to make you go into debt. Please don't get that secured card and go to the store. Like, we're going to use it to buy your gas. I'm going to teach you how to use it. And so it is, people are just ignorant to credit for one thing. I know I was. And then a lot of people are scared of it as well.
They're scared. I believe that's 100% true. They're afraid of it. And really, there's a lot of wealthy people too that do have loans and debt. The banks call them up. Hey, I got money. Do you want me to, do you want to invest in anything? And those people are really smart because they're actually using other people's money again for their investments. So those are things that you really shouldn't live in an all cash life, if you really want to be able to have investments and those types of things. But people are afraid of credit. They really are. So
they are. And we're trying to bring, like I said, we do the credit. And of course, that's a huge part of what we do. But Joanne and I are really trying to push this year into something that you mentioned before, really talking to people about talking money with their kids, their spouse, their family, about sitting at the dinner table and discussing money in general. Not telling your kids we're broke, but saying like, hey, we're going to budget. This is how we budget. And I just told my husband, I said, when our son gets money at Christmas, they always give gift cards. I said, from now on, I'm taking 50% of that. He's just 5, but it's time he understands, and he's going to know I'm taking 50% and why. So, and it's between couples too. I do deal with that a lot, that I have to call the husband and the wife separately because they don't want me to know what's going on with each other. You're affecting each other.
100%. Right.
And I have to let's get together and let's figure this out together. So it is, people don't want to talk about credit. People don't want to face credit. It's like tax time. Most of us don't want to talk about that either.
No.
But it's something that if you start talking about it, you can turn it into a positive.
Well, and our kids think money grows on trees. So, they literally do, because they don't know where it comes from. They don't know how hard you work for it. They don't understand credit and budgeting, but anytime they want something, oh yeah, sure, you can have that. So taking that percentage from him is really cool, because then you realize, oh, you mean this whole paycheck isn't mine? This whole commission isn't mine? I have to pay my taxes. I have to pay my credit, all of this stuff. That's fantastic that you're doing that at 5 years old. That's incredible. So we're going to wrap it up. We want to make sure that everybody that is watching this YouTube, please give us a thumbs up if you like what we're talking about. If you didn't like something, give us a thumbs down, but please tell us why you didn't like it so that we can, talk about that on our next video or reply to the comment below. But make sure you do subscribe to the channel, because we will have more great content like this, more incredible guests. And Amber, you were incredible. Thank you so much for taking so much time out of your day to go so in depth into this conversation on credit, which is such a huge topic for people to
Thank
understand.
you for having me.
So we look forward to it. Thanks again, everybody, for joining, and we will see you again here at Elite Experts channel.